Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Pachurdiz, and joining me is lead investment analyst Rafi Boyadjian. We'll be reviewing the week ahead. So Rafi, let's begin over in the Euro area, where inflation has been running hot. We'll get flash estimates on Friday along with preliminary readings on GDP growth in the first quarter. What can we expect from this data, and how might the euro react, keeping in mind that we will have the results of the French presidential election out on Monday to factor in?
So that is right, Maria. We do have quite a bit going on for the euro area in the coming week. We're already seeing in the last few days the euro kind of gaining a bit of traction against the US dollar. That's because we've had growing talk of a rate hike by ECB policymakers. We're getting signals that perhaps they will end their QE program in July rather than later in Q3. And some have even suggested that QE might end in June. So then that would pave the way for a rate hike as early as the July meeting. Now, up until now, expectations were that at the earliest, the ECB would only be able to raise interest rates in September. So quite a lot has changed if we get further confirmation of this timeline by the ECB. And one such clue might come from next week's flash CPI numbers for the Eurozone. We already had the recent CPI prints have been stronger than expected. So if we get another strong data for price increases in the Eurozone for April, then that would really strengthen the case for early action by the ECB to start lifting rates out of negative territory. Now, the GDP data, on the other hand, this probably probably not going to see that much of an impact from the Ukraine war just yet. Of course, there are concerns that growth will slow in the coming months because of the squeeze on consumers from high energy commodity prices and some impact from the sanctions against Russia. But overall, the GDP data will probably show that the Eurozone economy did grow at a modest pace in Q1. And as for the French elections, now we're already seeing the euro benefiting from Macron's increasing lead over his far-right rival Marine Le Pen. She was actually doing much better in the first round in terms of she was actually narrowing Macron's lead. Now Macron's lead has widened again. So it does look like Macron will probably get to serve a second term, and that would of course be positive for the euro.
Moving over to the US now, we'll get a bunch of data next week, including the GDP estimate for Q1 on Thursday, and March personal income and spending and the core PCE price index on Friday. Is any of this data likely to impact the US dollar?
Well, it's going to be interesting to see what's going to happen for the dollar from here on, because it does look like rate hike expectations have pretty much peaked for the Fed. Treasury yields, well, maybe they could rise a little further, but we are getting some early signs that perhaps inflation in the US is peaked or has started to peak. So if we get further signs of this from next week's core PCE price index, which is of course the Fed's preferred measure of inflation, then that could further weigh on the US dollar. We're also going to have of course, other data, the advanced GDP report for the first quarter, personal consumption and spending for March. Now, although the US economy did probably slow a little in the first quarter, it's more like a case of going back to more normal rates rather than the rebound that we got post-pandemic. We saw this incredible growth rate in the US. Now that, of course, was never expected to last going into 2022. But it's going to be interesting to see, where the dollar goes from here, given the market pricing for interest rates for the Fed and the signs we're getting about inflation peaking.
On to Australia now. The quarterly CPI numbers are due on Wednesday. If they do surprise on the high side, do you think there will be pressure on the RBA to start raising interest rates soon?
So we could see the Aussie benefiting from strong inflation data. Now, of course, if you look at futures markets, they're priced in a pretty aggressive tightening by the RBA, and the RBA hasn't even started raising interest rates. So you could say that actually there's room for a correction in terms of rate hike expectations, and that would be a negative for the Aussie. But given the fact that the US dollar is a little bit soft at the moment, and the RBA in terms of officially starting to move towards a rate hike, it's only just getting started. We've getting growing signs from the RBA of that, and markets have fully priced in a rate hike for June. The question is, would they move before that, say at the May meeting? That's not looking very, very likely, because we do have elections in Australia later in May, so the RBA will probably not want to do anything before that. But nevertheless, should we get stronger than expected CPI numbers, we could see some speculation of that, and that could potentially benefit the Aussie a little bit.
And finally, the Bank of Japan will be in the spotlight next week. Are policymakers likely to make any policy changes given that the yen continues to fall across FX markets?
Well, we're not expecting any changes, but in terms of policy at least, but maybe we could see some changes to the language. We are going to get updated forecasts on inflation and GDP growth. Now, the Bank of Japan will probably not want to signal any change to their yield curve control policy, but maybe they might start to sound a little bit more worried about inflation, or the risks of inflation, the upside risk to inflation, and potentially the negative effects of the weaker yen. Now, the yen has been in focus lately because it has fallen quite a bit against the US dollar and other major currencies. So how far the Bank of Japan will go in terms of sounding concerned about the weaker yen, that's going to be the main thing to watch. But the question is, even if the Bank of Japan does make more noises about it, if they're not willing to do anything policy-wise, then the yen would still be at risk of further declines.
Rafi, thanks so much. And thanks for joining us at XM.com for this weekly outlook.